very early. We looked very early into Bitcoin basically as a payments platform. We happen to have the first place in the world you could actually pay with Bitcoin, was in Berlin. So I went there, tried it out. I thought it was quite interesting, but really difficult to actually get set up with a Bitcoin wallet. And also, if you remember that back then Bitcoin was only payments. The store of value narrative was invented a little later. So I'm one of those people that spent a couple of Bitcoin in a burger and fries, didn't think too much of it. Then was able to meet some folks from the Ethereum Foundation later on at a dinner in Berlin, and thought that was at a high level quite interesting because it's a platform. It's not just a single use case. Early 2017, my Yachtley as a platform to build applications on top. So we really were first thinking of being entrepreneurs in the space. Realized very, very quickly that it's a little too early for, let's say, an Uber on the blockchain just yet. In those days, you really only had Bitcoin, Ethereum, and ERC20 tokens that you could send to Binance. But incredibly smart people in the space with very, very big visions. And for me as an entrepreneur in Germany, the defining experience was a struggle against bureaucracy. And anyone here who's ever been to a notary in Europe, it's quite the experience. It's usually the most beautiful office in the whole city. And it's just basically someone who watches you sign a contract and they get a percentage of the value of the contract as payment. It's quite mind-boggling. So you really have a lot of sort of bureaucracy, what we call trust intermediaries baked into the system. And they were really the biggest headaches I ever had as being an entrepreneur was dealing with the bureaucracy. And so when we dove back into blockchain, really understood it, personally, I got just very excited about it because I saw really a way to eliminate all these intermediaries that were just baked in by, laws and regulation, but really provided no value. In fact, they were actually negative value. And that's how we started out in the space.
Fantastic. And maybe I'll just flip it to you, Joshua. Again, just introduce yourself for everyone, and what you do, what Greenfield One is, and how you got into the space.
Sure. Thank you, and thanks for having us. My name is Jascha. I'm one of the founding partners at Greenfield. Probably very similar, I guess, story into the space, and obviously similar focus than what Lasse and his team at OneStage are doing. Greenfield got started in 2018 in Berlin, actually. We are a crypto investment firm, so we invest into the asset class both from the early stage side, but also through a more liquid, later stage focused strategy. On the early stage side, we are investing in our third fund right now, which we closed at the end of 2021, a 135 million euro early stage strategy. We have been focused quite heavily on infrastructure and DeFi, I guess, in the early years. So we were early investors into Near, 1inch, also invested in Safe. So lots of focus on infrastructure and DeFi over the years, and over the past 2 years. An area that we got quite excited about is consumer. So everything that is happening, I guess, more closer or at higher proximity to more traditional consumer use cases. For us, we're 25 people spread across Europe, from anywhere from Warsaw, obviously Berlin, London, Lisbon, Paris. So we do try to cover kind of Europe as a whole. The team is, as I mentioned, focused between infra, DeFi, and consumer, and we also try to be active within the networks and systems that we invest in. So we run infrastructure on many of the networks that we invested in. We do provide liquidity. We are active in DAO governance, which might be something that we're going to touch on later. So I think we try to, I guess, fulfill or provide all the different roles that crypto allows you to provide. So my personal journey into crypto has also been through an entrepreneurial experience. So I got into crypto working with Opera Software, the browser company, which we might all know from the early days of the internet. And in my previous life, in 2008, 2009, when the iPhone launched, I had built a mobile company, a platform for app developers and later on brands to basically analyze and monetize all your app properties. And we got acquired. So we ended up getting acquired by Opera Software in 2014, which is how I got into Opera. And then in 15, 16, Opera started to think about what could be the role of a browser in this new, I mean, it wasn't even called Web3 back then, in this new decentralized developer environment that Ethereum was promising to provide. And I think that was basically my entry point. So I had the privilege to be part of a group within the company that was supposed to be looking into this and trying to build a proposition for the browser. At the end of 16, I left Opera and basically found myself with no job, so a lot of time, some money to invest, and just started researching, investing into the space. And similar to what Lasse was describing, also started to see how difficult it was at that time, even more so than today, for local entrepreneurs to raise capital from local partners. And I think that, and I started angel investing quite a bit at that time, and working with founders actually made me realize that Europe at that point was missing, I guess, more professional investors and investors that would also be able to provide support and guidance along the way. So that led us to launch Greenfield in 2018. So we launched our first fund 2018, the second in 2020, and then again the third one on the early stage side late 2021.
Oh, fantastic. And just to remind you both, so the panel is recorded, but the Q&A at the end will be Chatham House and not recorded. So we won't hold you on the hook to anything. But maybe Joshua, starting with you, I think there's a few things that I want to cover in this session. We just gave a presentation on kind of the investable universe. And you mentioned that you guys play at various stages. So right, you said you do early, but to also will play late. So how do you in Greenfield One think about where you want to invest in terms of stage, right? Are you more focused on early? Are you saving a lot of capital for the late and liquid stage? How are you thinking about that stage?
Yeah, that's a very good question. I think what we do, something that a lot of the funds, I mean, out of separate strategies, which we try to cover the spectrum that many other funds in our industry try to cover, out of, I guess, one vehicle or one strategy. For us, the core focus has always been early stage, which is pre-seed, seed, early Series A, if you will, and then and you've kind of alluded on some of the instruments and structures, agnostic to instrument or structure. So we can do equity, we can do token, we do hybrid structures, so anything in between equity and token. We can do liquid, illiquid, public, private, on the early stage side. And then we've been always very disciplined in terms of portfolio construction, ownership targets, sizing, when it came to looking at early stage opportunities. But obviously in crypto, some of these lines are a bit more blurry, and sometimes you see, I guess, great opportunities that are still in the early stages, but priced at relatively later stage valuations, and which still provides a lot of upside. And for those type of opportunities, we obviously all tend to see them being protocols at more later stages, more mature, and for that we created a separate fund, which we raised towards the beginning of this year, that really allows us to I guess focus on opportunities that still have a lot of upside because they are still relatively early in the cycle, but kind of outgrown that typical stage and scope, where we have been, again, very disciplined on in terms of sizing and valuation ranges on the early stage side. So we did want to create a vehicle that allows us and allows investors to, again, build exposure and capture the upside beyond what we would typically see on the Series A side. And that's why we kind of tackle the asset class from these two angles, early stage, and then again, something that is probably a bit more liquid and later stage focused.
That's very interesting. I guess lastly, maybe kind of putting it the same question to you. You had mentioned, I think in your intro, that you're more focused on the early stage. How did you guys come to that conclusion? Is that tied into the fact that you're focused exclusively on tokens? How did you guys position the fund in that kind of sector?
I think it's, it came originally, the roots were very small. We were sort of just two ex-entrepreneurs that were the first to say we only want to invest in digital, in tokens in 2017. That was a very esoteric thing. as we have grown and the firm has grown and the AUM has grown, we have ended with a focus on Series A kind of and upwards, which we like a lot in the space. Winners, they seem slightly expensive, but what we see is that most folks, especially folks who come from venture, from legacy venture, they tend to underestimate the network effects of protocols. The only things that have stronger network effects than protocols are internet cables and physical rail lines and these sort of things. Much stronger than traditional equity companies. Right? Just as a member, we invest in open source token networks, and almost like public software infrastructure. And those network effects seem to be incredibly strong. And so Series A stage is quite nice because you have execution risk eliminated, you have product market fit risk eliminated. Usually they already are pretty and they maybe seem a little expensive, but the outsized returns, and then particularly on a risk adjusted basis, it's a phenomenal space to be in. But we have an incredibly strong brand. I think we've always fostered a culture of actually being helpful, because everyone will tell you that they're very, very helpful VCs, etc. And then you just do reference checks with the founders, and then you see who actually is. And so I think we've built an incredible brand there and have the track record. So we also get deal flow for the seed stage. And so we've raised a $75 million pre-seed seed vehicle. Notable investors include Mark Andreessen and Chris Dixon, and blockchain co-investors is also part of that. And that also allows us to take advantage of all these early stage opportunities that we're also seeing. And the differentiation is quite easy. It's really just up to 30 million equity valuation goes into the seed fund, and then anything above goes into our flagship fund, which is an evergreen vehicle that we've been running since 2018. And so for us, the Series A stage is still somewhat of an early stage. We've done selected sort of growth investments. So we led the SAFE round, it was a $100 million round there. But that was also a, sort of an outlier where we knew the space extremely well. Coming back to custody, for us, and anyone who's really crypto native, Gnosis safes, on-chain multi-signature wallets are really just a million times more superior than any centralized custodian could ever be. So there's some outlier cases where we do a Series B, I guess Series C kind of investment as well. But we kind of consider all of those things quite, earlier stage.
No, that's very interesting as well. I can't help but notice as well. I mean, this is obviously the European panel on. I mean, I'm American but based in London, but you guys are both, originally German. Maybe Josh, starting with you again. There was a question earlier in my section about how globalized the industry is. Like, do you find that this innovation wave is taking place more in Europe than I guess the previous kind of Web 1, Web 2 waves did? Are you finding that you're making many more investments in Europe? Are you focused in Europe, or are you kind of using that as your locus of operation, but really it's a global kind of mandate?
That's a very good question. I would definitely say crypto is a global movement for sure. I think the one thing that we learned and I guess realized in Europe, that on a relative basis, in crypto and Web3, Europe has actually produced a lot more winners than ever before in earlier internet waves. If you think about Web2, I guess there's this kind of running joke that people say the best thing that Europe produced was Spotify, and then that's pretty much it. And then if you look at kind of AI, obviously Europe positioning itself between China and the US is also not in a much better position, you could say. But then in crypto, I think something that we've learned very early on, especially in and around the Berlin ecosystem, is that you could think about crypto in the very early days also as an anti-establishment movement to a certain extent. So the early developers, coming into the space, being curious about what's being built and eventually starting to build something, I guess from a mindset perspective, also thought about going against the status quo of the web, which is obviously, an ecosystem and environment that is heavily dominated by a small number of companies that, mostly reside in the Silicon Valley or in the US. So I think if you have that in mind, obviously the early waves were also, partly based outside of Silicon Valley and, kind of traditional tech hubs. Berlin is a very important hub. You mentioned Switzerland. as well. You know, we saw a lot of the early bigger kind of projects. Ethereum, probably a great example here as well, with an office in Berlin, and then, you know, Switzerland being an important location for them. A lot of the, you know, bigger projects, if you look at obviously Gnosis, Polkadot, Cosmos, even 1inch on the DeFi side, they all had kind of some part of the team or early roots in and around Berlin or Europe. So for us today, I think, and we've also evolved, I think with Fund 1, given also the size of our fund, which was a lot smaller back then, we did invest a lot more globally, because we were with the first fund, we were not leading rounds. We were just following. We were trying to get into deals, trying to build reputation, trying to build track record of brand. I think with the second and the third fund, this changed a bit, and we realized that you know, once you start take lead positions, which is something that is a core part of our strategy, 70% of the deals that we've done, we either led or co-led. Even though, again, in crypto, things are a bit more global and distributed, also in terms of the team structures, at the end of the day, we're still venture investors, so we're not traders. So the relationship with a team is probably at the very core of our thesis and our investment. And that means that obviously working with someone in your time zone is a lot more easier than with someone who's 9 hours away. So that being said, the majority of the investments that we ended up doing out of, you know, the second and the third fund ended up being somewhat, you know, in and around Europe. But we've also invested outside of Europe, in the US and Asia. But the core focus, I think, for us at this point, just evolved in something being very kind of Europe-centric. Again, with exceptions outside of Europe, but then kind of just, you know, the idea of being closer to the teams that we end up working with.
You know, fantastic. And I guess lastly, maybe similar topic, but I'll reframe it a little bit without getting too much into your personal life. I think we know, right? You started in Berlin, moved to Portugal. I think that's a similar kind of story, and now you might split some time within the US. How have you seen kind of the hubs in Europe shift? Like, do you still see there being a major hub somewhere in the European continent, or where would you see kind of the key hub is?
Yeah, so it used to actually be, I think, from 2015 onwards, when the Ethereum Foundation really put the operational headquarters in Berlin. I would say until probably 2018, Berlin was the most important city for blockchain in the world. And then it sort of shifted, which is very, you know, low-level infrastructure, low-level protocols. A lot of it is by ideology-driven entrepreneurs, which, you know, Berlin as a counterculture kind of hub attracted a lot of those, you know, engineers and innovators. And then as that stack slowly started to mature and the winners emerged, you know, we went up the software stack, and you had middleware software, and this is when Silicon Valley started to become quite important. Also, you know, something to remember that actually Silicon Valley was very, very late to blockchain. There was initial small wave of people that invested in Coinbase in 2014 that stuck sort of at Bitcoin and never looked beyond, and then actually had a massive, and you still have this, you have this huge innovators dilemma happening in Silicon Valley right now, which is kind of hilarious because it's the favorite book of every VC in Silicon Valley. And so still a lot of skepticism in Silicon Valley even today towards blockchain. But in 2017, you saw the first wave of entrepreneurs coming in and really shining again where they are in terms of developer infrastructure building, you know, good software experiences for engineers. This is really where Silicon Valley is world class. And so at that point, Silicon Valley started dominating a lot. They're becoming very, very important. The more the actual, you know, user experience of the software mattered, whether that's on an engineering level or even at an end consumer level, which on the end consumer side, we're not quite there yet in terms of maturity of this new internet of money. Parallel to that, since the very, very early days, you always had Asia and particularly China as a very, very important hub, but for quite limited around CeFi. So OTC desks, trading desks, you know, exchanges, all these sort of things that really enable, you know, investment participation. And then the mining ecosystem, the proof of work blockchain mining ecosystem was very, very strong there, right? Incredible innovation around specific chips, computing chips, just for Bitcoin mining. So that's always been the case, but we saw very, very few, if not really only one investable deal that was actually low level sort of decentralized internet infrastructure that actually came out of China. What we're anticipating is that now, as we are, we are getting to the point where starting to make sense for an entrepreneur to actually build a crypto-enabled consumer app. You can go into a lot more detail why, but anything up to this date was unfortunately a little bit too early and didn't really make sense. Now, Asian entrepreneurs, particularly Chinese entrepreneurs, again, are very, very good at mobile internet. I would actually make the case that sort of Web2 mobile internet in China is 20x of what it is in Silicon Valley. We're anticipating that, we might see a lot of, crypto consumer deals or projects that are really coming from, from the Chinese entrepreneurial ecosystem. There's still a little bit the hesitation that the legal status and the reputational status of crypto in China is still very, very gray, and so you're taking a lot of reputational risk as an entrepreneur. We have yet to see really the tier 1 Web2 entrepreneurs in China, a new project to Web3. The crypto consumer stack really maturing and being ready for end consumer applications, plus that cultural shift where it is okay actually as to not lose your reputation as an entrepreneur if you go into Web3 in China. I think we could probably expect a lot of consumer innovation to come out of that region.
That's I mean, I think we see the same thing. It really is truly global, and it's interesting how you laid out how things have shifted around. Find that very interesting. So,
and
I mean,
this
I think
is why, just to note, maybe that's why for us at 1KX, we're global. So we have 25, 26 people all over the world, really, from San Diego to South Korea, everywhere. And so for us, it's not just like this is where we are, and this sort of we're anchored around that. We're really everywhere in the world where the best opportunities are.
Yeah. So we've covered kind of tokens, equity, stage, geography. Now I think I'd like to get into kind of, the investable universe, investment themes. So again, maybe starting with you, Joshua, how does Greenfield One think about the investable universe? Like, what are the key investment themes within blockchain for Greenfield One, and where are you guys kind of focusing now?
Sure. I mean, as I mentioned, for us, I think the way we've also built the team and the organization, at least on the investment side, is around these kind of 3 core pillars or subgroups that we created within the investment team. So we do have a dedicated infrastructure team, we have a dedicated DeFi team, and a dedicated consumer team. And these are, again, it sometimes, I guess, it is a bit blurry and things are not always binary, and you do have a lot of opportunities that actually sit on the intersection of one or another vertical. But that, I guess, these 3 pillars are pretty much the core focus of our investment activity. And within then these, I guess, subgroups or sub-pillars, we obviously do have various different themes that we look at. So on the infrastructure side, an area that we've spent quite a bit of time over the past, couple of months or year is privacy. Where we do I guess in general, we like to think more about problems than themes or narratives, because we do think the bigger a problem, the bigger the opportunity behind someone finding a solution to that problem. And we think privacy is actually one of the biggest unsolved problems that probably present a barrier for mainstream adoption, both on the retail but also enterprise side. So if you think about payroll, you would not want your salary to be paid in crypto if your employer would be able to see all your past financial history and what you pay for rent and how much you spend for going out for dinners the past month or so. So that is, I think, an area that we're quite excited about. We started investing in that bucket in 2021, and I think that this is probably one of the biggest areas of unsolved problems, especially after kind of the Tornado Cash incident. The other area that we do like a lot on the infrastructure side is everything around Bitcoin and advancements of Bitcoin core or things around it that allow you to, I guess, utilize Bitcoin in a trustless and censorship-resistant way. If you think about the irony behind Bitcoin, is that it is obviously the oldest, the most trusted, and obviously the biggest asset by market cap. But then, obviously 15 years ago, it started out as kind of the idea behind Bitcoin being sound, independent, sovereign money. But the irony here is that if you wanted to utilize Bitcoin, you want to trade Bitcoin, you want to borrow against it, you have to rely, or you had to rely on centralized platforms. And I think in the aftermath of 2022, we obviously learned that a lot of these, at least on the lending side, a lot of these platforms disappeared and collapsed. So we think that this is a hugely untapped opportunity to build technology and infrastructure that allows us to utilize Bitcoin in a decentralized way, whether that is in DeFi or in other areas like lending. We did invest in 2020 very early in a project called Sovereign, which was or is the first Bitcoin native DeFi application that again allowed you through a sidechain called Rootstock to transact and utilize Bitcoin in a decentralized way. We did the latest investment in that area, which we recently did, is a company out of Ukraine, actually, Strum. Strum is a liquid staking protocol, so it allows you to utilize and stake your Bitcoin in the Lightning Network and provide liquidity to Lightning channels and generate yield. So again, these type of things we do like a lot. So big problems that come with not existing solutions. Again, on the infrastructure side, privacy and Bitcoin. There's obviously a lot more on the DeFi side. We do like to look at the space from, I guess, after DeFi summer, DeFi potentially having a second summer, with a lens to look for, I guess, second generation of DeFi protocols that come with the existing inefficiencies in the stack or in the infrastructure, built and designed in mind. So MEV is a big issue or a big topic where we do look for protocols that are designed with MEV in mind. So I guess solutions that allow you to redistribute the value that is being leaked down the value chain of transactions that are being written on the blockchain back to protocols and back to the users. So there's a lot of inefficiency in that side where we look for solutions that are solving that and making it more efficient. UX is a big thing as well. If you're familiar with the wider intent space, where basically you abstract away all that kind of complex blockchain stuff from the consumer and basically allow the consumer to articulate a desired outcome and then let others or third parties facilitate and kind of achieve these outcomes through kind of more complex transactions and programs, which can also work cross-chain. And so that's another theme that we do like a lot. So again,